Hello guys, this is Trader Sebron here. Now, I want to be sharing with you how you can trade psychological levels. Now, this is for beginners. It doesn't matter where you're watching me from. If you're just starting in Forex, this is one thing you want to know. If you've been trading and you'll be finding it difficult to trade your support or resistance level, sometimes they hold, sometimes they don't. Listen, let's move to the next level of learning how to trade the psychological levels. All right, I'll be right back. All right, guys, we're here. Now let's get into the nitty-gritty of how to trade psychological level. The first thing you want to understand is how do you trade it? Now, I'm going to be sharing with you how to do this using the gbpusd, which is my favorite pair anyway. So I want to share with you how to do it, how to set your chart up with psychological levels, and how to trade it. You don't want to miss this video. So now first of all, let's check what does it mean. On Google, if you type in trading psychological level or psychological levels Forex, you see it says what psychological level is in Forex. So psychological levels represent strong price levels denoted by random numbers. So he's talking about round numbers here. It says a whole number trading strategy and is a trading strategy. I want you to mark that word. It is a whole number trading strategy. Okay, that's what I want to emphasize. Now let's go back to the chart. Now you can Google the rest of the information if you want to. But here's the point. How do you plot your psychological levels? So the first thing is, if you're a day trader, if you're a scalper, if you are a swing trader, you need to know your time frame. What is your time frame of trading? What time frame do you trade? That's the point you want to think about. If you trade like the daily time frame, the weekly time frame, and the 4-hour time frame, then you are a swing trader. If you trade the 1 hour 15 minutes time frame, and then you might consider yourself to be like a day trader, like 4 hour, 1 hour, 15 minutes. And then if you're a scalper, you're looking at 15 minutes, 7 minutes, 5 minutes time frame, 1 minute time frame, you get it. So you need to know what type of trader and what time frame you're functioning. That's very important. That's another day's talk. Now, let's deal with the fact that I'm a day trader and you are a day trader. I'm just assuming that you're a day trader and you are a beginner. You want to learn how to do this. Now, first of all, you look at the chart. Stay on your time frame. I normally do this on 4-hour time frame to have a clear picture of what the market is doing. Then I'll narrow down to a lower time frame to have even more levels plotted out looking at the chart. Now, if you're looking at GDP USD today, you see that this is what the price is giving us so far. Now, if you check the previous high, you see that price came up to this level right at the peak here. This is the peak, right? But the peak there wasn't considered as a major level. So let me first of all just break it down for you. We're looking at random numbers. If you check where price is right now, you want to look at where random number is. The first random number you can see where price actually got to is 1.20 thousand levels, which is $1.20 $1.20. Yeah. So you look at that position as the first psychological level. Now, the next one that you want to see is this 1900. So you have your psychological level, the 1900, which is obviously 1.19. And then the next one you want to see is the 1800. We see price came up to the 1800 as well. Then we're going to put that psychological level there as the 1800. Now, remember, these are not lines. These are zones. All right. Now, this is the clearest I could see. And then the next one is 1700. So I will take that random number as 1700, which is 1.1700. I'm just using that as a 1700, but you know what I mean. So there we go. So you take that price level. Now, it depends on how you trade. But this is looking at it from the 4-hour time frame to draw your psychological levels. Now, I can equally take these few positions, look at it, these few steps, and I'll break it down to the lower time frame. So I'll go to the 1-hour time frame and look at what price is doing there. Now, if you measure this place to this place, it will give you what? 100 pip. So we have 100 pips in between these psychological levels. Why? Because you can see that this is 1900 and it goes up, and this from here to here is 20 pips, 40 pips, 60 pips, 80 pips, and then 100 pips. So you know how to look at that from that perspective. Now, this is psychological levels being drawn. Now, what can you see? What can you see? You see that price related on these levels. Price jump into these levels and bounce off. Price came to this level. Let me just highlight this so you can, I want to annotate so you can see what I'm talking about. You see these levels? Price came in there and bounce off. Price came in there, bounce off. You see, price respected this level. Okay, price respected this level, and then you see how price reacted to it. That is what we mean by psychological level. Now, this is a trading strategy, okay, that you need to develop, you need to build yourself to understand how to use it. But it's very simple. It's not that difficult at all. If you can know how to position your psychological levels, which a lot of people call support and resistance, but price recognize these levels, because that is where many of these bankers, money makers, hedge fund traders, this is where they normally sell and buy the currency from. So you need to actually understand why we look at these areas. Now, in between, all right, you can find that there are psychological levels as well. Now, I want you to go in terms of 50. So I want you to go in terms of 500 points in between. Now, this is a 1,000 points. From here, price move 1,000 points to this level. This move to the upside, okay? Now, from here to downside will be, again, another 1,000 points. But do you know that price eventually can move in between the 1,000 points and get into the 500 points? What I mean by that is you can actually see a minor psychological level on the 50 pip measure. For instance, you have the 40 pips here, and then you have the 50 pips here, right there. Now, this is the middle section. You see what price did? Between here and this zone is 50 pips. Now, I can decide to call this one my minor levels. So I will call this one my major levels. You see now? Labeled. Now, with this, you can understand whenever price comes to that level, you know exactly how to react. So again, you look at this same zone between here and here, you're looking at, hey, how many pips can I get? 500 pips, 500 point, which is 50 pips, and right there. So you take your horizontal line, again, you do the same thing. Horizontal line right there, and then you put it at right there. So this becomes, again, your minor levels. Now, the question is, how do you trade this? Now, in between the zones, you have 50 pips. From here to here, 50 pips. Let me just ensure this is properly aligned. That's 50 pips right there. Right there. You see? Great. The same thing. 50 pips right there. Now, I want to show you how to trade it. Now, I have shown you how to do it, how to draw your psychological level. The question is, how do you trade it? Now, what do you look for? What kind of candlestick pattern you need to trade this? There are different kinds of candlesticks pattern that you need to understand and learn from. Tweezer tops, doji candle, bullish engulfing candle, bearish engulfing candle, hammer, and inverse hammer, whatever candlesticks you're conversant with your trading strategy, you need to look for that in these zones, in these psychological zones. So let's assume we're trading somewhere around this level. Okay, let's assume this is on Friday, this is on Friday, this is Thursday. Assuming we're trading here. Now, we're looking at it from the 1 hour time frame. As a day trader, I normally take my entry on the 15 minutes or 7-minute time frame. That's when I take my entry. So I want you to know, if you're a day trader, I don't take my entry on 1 hour time frame, because price may have moved several pips away before I can take my entry. So normally what I do is, because I target 50 to 60 or 100 pips per day, I'll normally go to a lower time frame to get my entry. So assuming price is here, how do I trade it? I will wait for price to react at this zone. If price was heading up like this, I'll wait for price to react at that zone, showing me a sign of rejection. Now, if I was to take this place, just a minute, if I was to take this position here and highlight it and go to a lower time frame, which is 15 minutes, I want you to see what the candle did here. Did you see this? Now, if you move to the back, move behind, move back, you see that price reacted at that same level before now. And it was closed there, he reacted again. And here, price react again on this level. So that means that this 19,500 level is a very strong area where price intend to react on or reverse from. Now, you see my entry candlestick. All right. We have a swing high, and then the market dropped, and a doji candle closing, rejecting from that level. So what do I expect? A bearish engulfing candle before it drop. Now I can even go further to a 7 minutes time frame. Okay, and then I will look for a pattern that suits what I'm looking for. Now this is a 7 minutes time frame. What am I looking for at this level? Okay, you get it. So now I'm looking for a two major pattern here on the lower time frame. All right, the M pattern or W pattern that can form on this zone. Now I normally get this pattern within 15 minutes time frame or 7 minutes time frame, which is clearer for you to get into the trade. Now, if you check this candle pattern, price push up and then created that pattern there, you say, well, I can see the pattern. What I'm teaching you now, if you apply it, you're going to make money. Look at that. That is it. You turn your charts to a line chart. What do you see? Ooh la, you got an M pattern there. And then what? That's your entry. You're looking for that pattern to form, and then you get in. You go back to your candlestick again, and then you saw that was your entry. Immediately this candle closed and started printing, we have the push-up, green, red, and green, and then red. Now this is your entry. So where do you get into enter this trade? Very clear. You can see you short from here, right there. As the candle closed, you short from there, and then put your stop loss right above the previous high, which give you 19 pips to that level, and then you're targeting the previous low, which is here that the market created. So you target that low. You say, but what about that psychological level? You just saw what happened. The market splashed through it. You say, well, it's because the market has already moved. That's why I targeted that level. No, if you check the market structure, I would have loved to target this level as well, because market always react to structures. Okay, that is another day's topic. Okay, don't worry about it. But this is exactly what you need to do. Target this level or target this level, and that's it. And guess what? That was your trade. Now, this is how you can trade psychological levels. First of all, practice how to design it. How to set your chart on psychological levels. And then you want to be able to see the chart pattern that you like to trade, or candlestick pattern that you like to trade around these levels. Another example is this. Look at what the candle did. Now, remember, you have to trade with the trend. Don't just trade randomly. You follow the trend and watch out for price action. Now look at what it did here as well. You see this level? Price reacted 1, 2, 3 at the key level, and this will be your entry. And that is a clean 50 pips trade that you would have caught right there. Clean 50 pips trade. You say, how do you know? Let me do a replay on this quickly. You see where prices are? Okay, price came up here, reject the first time, and then if you play the next candle, that's the second rejection. Green candle already to the direction of the downside, and then that is it. So at this level, you should be planning to get into the trade to short from there. That's it. Put your stop loss right below the previous high, or you can target this previous candle high, or even the one that is printed on the body, and then target the next psychological level. Right? Now you have 1 to 3 risk to reward. Let's see what the candle did. Pushed all the way down and take profit hit. Now, all of this is done if you just back test. Now, look at this trade right here. How would you have gotten into this trade? We saw price rallying up, and then he created a bearish momentum to the downside and eventually stopped there, failed to push further down. What happened? A bullish candle, and then indecision candle, and then bullish engulfing candle. This is your entry. At this level, you find your entry. Why? Price is going up to that direction to hit the next psychological level. So you put your entry there, and then your stop loss right below the previous high. I mean the previous low, and you're targeting up there. That is 1 to 2 risk to reward for the 3 pips right there, just smashed easily. So if you were risking 1%, you just made 2% on that trade in less than how many minutes? Let's see how many candles there. 1, 2, 3, 4, 5, 6, 7, 8. Oh my goodness. If you even go to like 15 minutes candle, that's like 1, 2, 3, 4 candles. Oh man, look at that. 15 minutes candle, 30 minutes, 60 minutes. That's 1 hour. In 1 hour, you just smash, I don't know, depending on how many lots you're using on your account. Listen, guys, if you will backtest this, you will make some more money, so much money. You will make a lot of money trading these psychological levels. And it is easy to do if you're trading GBP This is a beautiful thing. Look at that. Look at that. Man, I cannot overemphasize this enough. I tell my student all the time, learn to trade psychological levels. Look at that. You make a lot of money. Look, guys, look at that. Crazy, right? Crazy. And we can go back to history and see how this is playing out on the chart. All right, guys, I believe you enjoyed this video. Now, if you haven't hit the like button, smash the like button. Hit the subscribe button if you haven't done so, because there's more of like this strategy video that I'm going to become bringing to your way, and also a detail on risk management and trading psychology that you need to understand. So I'm going to be bringing some of these videos to you. So you need to subscribe and hit the notification bell notification button so that you can get this video coming to you as first hand. Guys, I hope you enjoyed this video. All right, share this video, and also I'll see you in the next one.